And what you basically have is this beautiful wedge pattern connecting the lows to the highs here as well. And you can see that we're coming to a head. So what this tells me, when you come to a wedge pattern head, it means you're either going to have a breakout or a breakdown. Yeah, so I'm actually relatively optimistic on Bitcoin right now. I'll pump up my chart here so we can take a look. And what you basically have is this beautiful wedge pattern connecting the lows to the highs here as well. And you can see that we're coming to a head. So what this tells me, when you come to a wedge pattern head, it means you're either going to have a breakout or a breakdown. I think with the dollar potentially topping and the Fed potentially at a pivot point, the short-term pressure is more likely to the upside. So I actually think you'll test this high-end range here. So right over here it would be. So right in this vicinity here, which is around 20,800. And if you can clear that, then I'm in the camp of a very strong October with upside potentially maybe to about 25,000. I mean, to be honest, that's a little outside of my knowledge base, but I would think it's a positive. Anything you're adding in any way to trade with the US dollar and so forth, I would think it would give people more opportunities to get involved. And so I would assume it would be good, but I'm not sure how much of an overall impact it will have overall. Yeah, I do think so. I think the interconnection of trade, we know the supply chain, right? Now, interestingly enough, we've seen with semiconductors how a lot of countries are now saying, hey, listen, we can't be reliant on China or this country for our semiconductors, so let's build out our own. But that just shows you how interconnected it is, and I continue to believe that it'll be more and more interconnected in the future. So with currencies, with trade, with everything like that, it is so interconnected, where we're seeing even with Russia and energy, right? Think about that and the impact on Europe as a whole. So it is a global environment, and what it means is that if the US falters, the rest of the world generally will. So number one, with the most addressers or adding the new active addresses, I'm assuming that has something to do with the merge. Probably the excitement around the merge got people really involved. So that's number one. That's always good, right? The more people involved, the better. Doesn't mean price is going to go up near term, but I think longer term, that is a bullish sign. And if we take a look at the chart here, what we can see is that Ethereum is kind of hugging this lower trend line. And you got this same sort of wedge pattern. It's a little bit of a different shape than the Bitcoin one, but nonetheless, you're hugging this line here, and you want to see Ethereum hold this 1260 level right here. Yeah. If it can attack the upside and break out, you got an easy upside target of around 2,000 again. And again, for me, it's the 2,000 level is going to be tricky because you also have the daily 200 moving average up there. But that would be kind of my near-term best up case scenario before maybe some more downside. So I think number one, October is going to be a really intriguing month. And the way I could see it playing is in the near term, we're getting this relief. We got some weaker economic data. If the jobs number comes back out a little bit lighter as well, maybe you get a continuation into next week. But then I am concerned about earnings, right? I mean, we've heard from FedEx recently. We've heard from Nike recently. I mean, there are so many nasty warnings going on that I am concerned about earnings season coming in. Yes, stocks have taken a hit, so I think the expectations are lower at this point, but I do think for the most part, they're not low enough just yet. And I think, again, the Fed hopefully is listening to what these CEOs and these conference calls are saying, because I do think it also is a big player into whether or not they pivot. Yes, I agree, down the line at some point, the dollar will collapse. I think the dollar, in fact, let me show you guys this chart of the DXY real quick here. I want to just show you guys this, because this went right into the perfect analysis of what I was talking about. So, look at this surge up in the dollar and then look at where it halted. And all you have to do is really just draw a trend line, and it gave you where the dollar was going to pull back from. But at the same respect, you have to understand that the dollar still has a lot of downside support. And what we can do is basically draw a trend line here as well. And so, yes, I think the dollar is going to pull back here, but this line here would be the bigger break point. But even if that happens, I mean, currencies don't go from being the reserve currency of the world to collapsing overnight, right? I mean, it doesn't work that way.
I've seen fast things, but I haven't seen that one.
Right, like Rome's deterioration happened over hundreds of years until it, was no longer the superpower, just like most superpowers have. So I think it's important to recognize that it's great for headlines, and I do think the dollar eventually is no longer the reserve currency. But to say, it's going to collapse, what's the trigger for that? If the Fed is printing again, so is every other major, economy in the world. The ECB would be doing that. So would the Bank of, so it's tricky, Long term, I just love gold. So I mean, and again, the next few years I'm not sure about, but I think in the next 10 to 15 years, and again, I don't know if it'll be the digital yuan or there'll be some new currency. I mean, I've hypothesized that, you see the pound trading almost at par with the dollar, the euro trading at par with the dollar. I mean, you almost could create a world currency amongst these bigger countries and then kind of have that supplant the U.S. dollar. And again, I don't think the U.S. government would want that just yet. But for me, it's like, if you look at history at how long reserve currencies lasted, we're at the end of that cusp as a reserve currency from when it started. And I think that's something people overlook. I mean, you can look at England when they had it, or when France. I mean, there's so many different reserve currencies. But the point again is that what happens with reserve currencies is that the governments that have them take advantage of that by printing too much. And that is the downfall of the reserve currency. Eventually people get fed up with it and they're like, well, why am I buying your debt if you're just going to keep printing? Yeah, so I definitely am in trades. I've been in gold. I'm loving the gold move today, folks. I mean, holy cow, about time. You guys know I've been a big fan of gold for quite some time, and we're finally seeing
Show
the
us
crack
a
on
gold
the dollar.
chart. Let's really get the
silver can increase as well, or at least get back on its feet. So I think that's part of it as well, is that the Fed pivot works on multiple levels, right? So Fed pivot works for gold and silver because they're a store of safety. So if the dollar declines, and then on the industrial side as well, it works. Yeah, so I think as XRP goes, I mean, this is a lot more positive, what we saw here recently. So take a look at this chart. I think last time we talked about this huge wedge pattern, right? And look at what happened. Broke above it and you just ripped. And then again, just to show the beauty of how charts work, look at these pivot lows over here and then just put a trend line and you could see exactly where it stopped. But what's nice here is that it's holding a lot of these gains. It's going sideways, it's chopping, and that is bullish consolidation. Now, again, anytime you come into a big decision by a judge or any individual, there's nothing that's guaranteed. We know that there's nothing in investing that's ever guaranteed, but it's certainly the price action is better than what it could have been. And I think that's the positive that you take away from it, that it is definitely a nice looking chart right now. Oh yeah, it's still going there. There's no doubt about it for me. So, again, the way the economic outlook for me goes is that you're going to get this relief during the Fed pivot, whether it's in November or December, whenever it does occur, you'll get this relief, and that will just help all risk assets. And then once we see the dawn of the realization that the Fed can't print us out of that incoming recession, that's where you'll see risk assets collapse again, including Bitcoin, at least down to 12, 13,000. There's always a chance, but right now there's a huge amount of resistance around 25,000. So we'd have to see if we get through that. And then I think, again, it just comes down to at what point do we actually see that? And I think for instance, I'm surprised the S&P hasn't even gone lower before this relief rally, which means maybe the jobs number comes out stronger. Maybe we still have a little bit of a leg down. I can show my S&P chart real quick here, but I'll show you guys what I was really factoring in. So this is the spiders chart, and we did hit this little pivot here, but before the relief rally, the pivot rally, I was really anticipating that we would touch this level here, which was that 2020 February pre-COVID high, and we haven't done that yet. So it's kind of like a little bit murky here. It's like, do we still have maybe one more sell-off down in the S&P before that longer extended, relief rally on a Fed pivot, or do we have it now, and then when we go down there, it's just further downside? Yeah, I mean, I think the big question is going to be all about the inflation numbers. So I think the Fed will cue into that. That's what I would cue into, and think that they're not going to start lowering interest rates until we see a dramatic downshift in inflation. Now, if we get to 4% or so on inflation and the economy spirals down, then absolutely they'll start lowering rates. But I mean, if it stays north of 5, it's hard to imagine. But I do think, by the way, it's going to come down. It's just right now you have these kind of longer term like wage increases that are keeping it up. But I mean, we've seen housing materials, gold. I mean, every commodity has basically come in. Yeah, no, I do. I kind of dabble occasionally in Solana, Avalanche, and a few of these other ones. And so I mean, the one thing I would say is looking at the chart itself, there's a kind of a defined trend line right here that we're banging up against, right? So we're right into this little thing. So the idea here is Solana could actually have a nice little run, but it needs to get up out of this kind of this trend line that's downsloping right here. If that happens, I think you got upside to 38, 39 bucks pretty quickly. And then, you know, there's always the offshoot chance that you could get up to 47. I mean, that would be a big risk on rally to get there, but that would be something that I would pay attention to. And I think the same goes for a lot of these cryptos. A lot of them have this kind of wedge pattern that Bitcoin does. And I think if Bitcoin can break out, you'll see risk on in the crypto sector. You'll see people talking about the big moves, and that'll draw in a lot more investors as well. As of now, yes, because again, I'm just not 100% sure on the technology of some of these other ones. I don't know enough about it, but I think those would be the ones that I'd feel comfortable in this environment, and then looking to keep an eye on what emerges as the leaders going forward. And then obviously outside of the digital realm, you're looking at like gold would be a protection place to go. And again, if you weren't in gold in US dollars, but in yen or in euros, you're doing amazingly well this year. And even gold is only down 5% on the year. So I think you just have to kind of look at these assets that are somewhat recession proof if you can. And again, I think that's where you want to kind of hide right now. Doesn't mean you can't be in and out of some stocks as well, because we know that bear market rallies can be awesome, but you got to be careful on your timing, obviously.